Europe just made a move that nobody saw coming, and it's sending shockwaves through global finance. We're talking about America's closest allies literally walking away from US Treasury bonds, and they're not being quiet about why they're doing it. This isn't some minor portfolio adjustment. This is a calculated political statement that could reshape how the world views the dollar. Let me break down what's happening, because this is bigger than most people realize. So why European pension funds are dumping billions in US assets, and what it means for America's financial future. Let's get into it. Here's what went down. Two major European pension funds just made headlines by selling off massive amounts of US Treasury holdings. And get this, they're openly saying it has nothing to do with economics. Start with Sweden. Their government pension fund, known as AP7, just offloaded $8.8 billion worth of American Treasury bonds. That's billion with a B. This isn't some small-time investor. This is one of Sweden's flagship pension systems. Then you've got Denmark. A major Danish pension fund dumped $100 million in US holdings. Now sure, that's smaller than Sweden's move, but here's why it matters. They both said the exact same thing. This wasn't about making money, this was about making a point. Add it all up and we're looking at roughly $8.9 billion in US Treasuries being sold off in what feels like a coordinated message to Washington. Look, pension funds dumping treasuries isn't new. China's been doing it, India's doing it. Lots of countries are diversifying away from the dollar, but those are countries that have geopolitical tensions with the US. That's expected. This is different. This is Europe. These are America's NATO allies. These are countries that have historically never politicized their US investments. European institutions have always treated American assets as the safest bet on the planet. For decades, there's been this unspoken rule in European finance. You don't mix politics with US Treasury holdings. It's just not done. These bonds have always been seen as the ultimate safe haven, liquid, predictable, backed by the world's largest economy. But that taboo just got shattered, and both Sweden and Denmark were crystal clear about their reasoning. So why now? What triggered this? Both pension funds explicitly stated that their decision was politically motivated. They cited concerns about America's rule of law under the Trump administration. They pointed to what they called coercive diplomacy and unpredictable foreign policy behavior. The immediate trigger? Greenland. Trump's aggressive rhetoric about taking over Greenland, which is Danish territory, didn't sit well with Copenhagen. But it goes deeper than just one territorial dispute. European officials are increasingly worried about what they see as American unilateralism. The recent statements about NATO, the pressure tactics on European allies, the entire approach to foreign policy, it's all adding up to a perception that the US is acting more like a bully than a partner. Here's a direct quote from the Danish pension fund statement. They said America has crossed a red line. They're essentially saying that if the US is going to use political pressure on issues of sovereignty and territory, then Europe's financial assets won't remain neutral anymore. Think about that for a second. These are pension funds, institutions that are supposed to prioritize long-term stability above everything else, and they're willing to take a financial hit to send a political message. That's how serious this is. Let me explain why pension funds selling is such a big deal compared to, say, China selling US debt. Pension funds are long-term investors. We're talking 50, 60-year time horizons. When a pension fund buys US Treasuries, they're essentially saying, we trust America for the next half century. They're not day traders looking to flip bonds for quick profits. These institutions buy treasuries because they're supposed to be risk-free. They're predictable, they're liquid, they're the bedrock of conservative investment strategy worldwide. So when pension funds start dumping these assets and publicly stating it's because they've lost faith in American institutions, that's a 5-alarm fire for US credibility. It signals that even the most conservative, stability-focused investors are rethinking their relationship with the dollar. And that's a narrative shift that's really hard to reverse. Now let's talk numbers, because Europe isn't some small player here. Most people know that Japan is the single largest foreign holder of US debt. They've got over $1 trillion in treasuries. But here's what people miss. When you look at the European Union as a bloc, they actually hold more than Japan. Break it down by country. The UK holds around $700 billion. France has about $300 billion. Germany is sitting on $250 billion. The Netherlands holds $105 billion. Belgium sometimes holds up to $300 billion. Add it all together, and the EU collectively holds approximately $1.6 trillion in US Treasury bonds. That makes them bigger than Japan when you count them as a unified bloc. So when European institutions start selling, we're not talking about pocket change. We're talking about a massive chunk of America's foreign debt holdings potentially becoming unstable. Here's where this gets really interesting. Up until now, de-dollarization has mostly been a BRICS story. Brazil, Russia, India, China, South Africa. Countries that already had geopolitical tensions with Washington. The US could always dismiss that as expected behavior from rivals. Of course, China is diversifying away from the dollar. They are our competitor. That narrative was manageable. But this is the rebellion coming from inside the house. This is America's own alliance structure starting to crack on the financial front. When Western nations, countries that benefit from the dollar-dominated system, start walking away from US assets for political reasons, that's a fundamental shift. It means the weaponization of the dollar might be backfiring. And here's the thing that should worry policymakers in Washington. Sweden and Denmark are setting a precedent. They're showing other European countries that it's okay to make this move. If they can do it, why can't France? Why can't Germany? Let's be real about what's at stake here. The United States runs massive deficits. The national debt just crossed $36 trillion and counting. To finance that debt, America needs foreign buyers for its Treasury bonds. If major holders start dumping those bonds, especially for political rather than economic reasons, that creates a serious problem. It means Treasury yields might have to go higher to attract buyers. That means borrowing becomes more expensive. That means the debt spiral gets worse. Plus, there's the jurisdiction risk that Europeans are now openly worried about. These are assets under US legal control. If Washington decides to freeze assets or impose sanctions, foreign holders have limited recourse. That risk always existed, but allies are now factoring it into their decision-making. The so-called risk-free status of US Treasuries is being questioned by the very countries that helped build that reputation. Look, the dollar isn't collapsing tomorrow. Let's be clear about that. It's still the world's reserve currency. Most global trade is still denominated in dollars. That's not changing overnight, but the trend is unmistakable. Confidence is eroding, not just among rival nations, but among allies. And in finance, confidence is everything. When your closest partners start publicly questioning your reliability, when they're willing to take economic hits to distance themselves from your assets, that's a long-term problem. The dollar's dominance has always rested on two pillars: economic might and political stability. Right now, both of those pillars are showing cracks. So where does this leave us? Europe just sent Washington a very expensive message. They are saying that political bullying has consequences. They are saying that even allies have limits. And they are proving that the financial ties that bind the Western alliance aren't as unbreakable as we thought. Whether this is the beginning of a larger European exodus from US assets or just a warning shot remains to be seen. But one thing's for sure. The world is watching. Other countries are taking notes, and America's financial dominance looks a little less certain than it did a month ago. This is a developing story, and we'll be tracking it closely. The next few months will tell us whether this was an isolated incident or the start of something much bigger. What do you think? Is Europe overreacting, or is this a justified response to American foreign policy? Let me know in the comments, and don't forget to like, subscribe to the channel, and hit the notification bell so you never miss an update. See you in the next one.